because you didn't analyze it properly before you got in at the wrong time, and now price is coming against you and you panic to sell. But at the end of the day, it went up.
Got it.
Okay. So improper analysis to know where to get in will also affect where your risk should be.
Today is Sunday, so he's gonna go through the process of how he picks the stocks and everything else that he usually do, and we get to learn and hopefully make better decisions when it comes to buying and trading. Welcome back to my channel. My name is Anastasia. If you've been here before, thank you so much for coming back. If you're new, come on in, make yourself at home. Here we talk about everything. So we are talking with Patrick again. We talked to him a couple weeks ago. He's a stockbroker and he educated us. And it seems like there was a lot of interest. People wanted to know more, get more specific details. And I asked him, and he was available and willing to talk to us. So he's going to break it down even further. So if you want to know a little about his story and how we got here, check the previous video. It's going to be in the description box and also in the playlist. So come on in and let's learn more about stocks. So
Thank you very much. Normally, I choose my stocks the day before I trade on most of the time, and sometimes I will choose and leave them in for 2 or 3 days, waiting for the target move that I expect. Okay. And there is a whole criteria which is involved in deciding on which stock to invest in. You don't randomly just pick a stock and then decide to buy.
exactly.
Yeah. As much as you choose which stocks to buy, there are certain things that you also have to make sure that you have identified them before you buy. Okay. So for example, this stock is MLGO,
MLGO. Okay.
and that's the name of the ticker. And I got in this trade on that's last week Monday. So based on my analysis on last week Monday, I had certain indicators, or I came at a conclusion that the stock will go up. So I bought it.
So what are the indicators? Like what will make me look at a stock and say, okay, this is gonna go up, I should invest in it?
All right. So there's a whole list of things that you can focus on. I'm going to talk about just some few of them. There is what is called fundamental analysis and then technical analysis. As a day trader or a swing trader, in my opinion, it doesn't make sense to focus on fundamental analysis. Fundamental analysis is more of analyzing how the company is doing on paper based on their profit, their returns, how much they are spending on certain things to improve on the business. Okay. And as well as contracts that they are getting from other institutions, partnership, and so on and so forth. So depending on all of these, it gives investors an ideology that, okay, because this company is in partnership with company B or company A, there is a high probability that they will increase their revenue. Or because they got a contract from the government or from a certain department, there's a high probability that they will do. Because they are end of month or quarterly or monthly reports in terms of revenue generation is high, there's a high probability that it will go up. These are fundamental analysis.
Okay.
If you are doing day trading and you are going to base your decisions on fundamental analysis, most of the time you go wrong. The reason,
so no fundamental analysis.
Yeah. The reason is that, let me give you a scenario here. Let's say company A had gone through a bidding process to win a contract from the government. That process did not start yesterday.
Right.
It probably started a year ago or months ago and all that. But on Monday, you open the news and then hear, oh, company A got contract from the government. At that time, that is when the news is public to us.
Yes.
You understand?
Yeah.
But in actuality, the process was started months or years ago. And the big boys, those big financial institutions, they have access to most of this information than us.
Absolutely.
So the time that we would get that information, they had already bought a chunk of the stock ready for the move.
Because they know what's about to happen.
Exactly. Okay. So as a technical analyst, if you are going to look for the news before you decide on what to trade on, most of the time the news that you find may not go in relation to...
And it's too late.
Exactly.
So then how do you get the background information?
Okay. So as a technical analyst, most of the decisions are based on the charts, the patterns that you see.
Oh, so it's a computer program that you're using?
Yes.
Okay.
So my trading platform for regular stocks, I use Thinkorswim, and I have an application which I have a lot of parameters that I change those parameters to decide on, which will pull a list of stocks for me, narrow them down out of the thousands and millions of stocks in the market. So in my indicators, I may be looking for stocks which are less than $5 as one of the criteria, and then also
like a filter.
Yes, exactly. So those parameters are going to filter down or narrow down a list of stocks for me which falls within those parameters. So if it is less than $5 or $5 and below, if the last 3 days or a week trading volume is over 1 million, that is another criteria I'm looking for. That is an indication that there is liquidity in the market. When you talk about liquidity is about people getting in the trade and getting out of the trade. So there are some stocks, they have a very low liquidity. People are not buying, people are not selling. So in such a situation, sometimes it becomes hard to buy, or sometimes it becomes hard to sell.
Because nobody is buying
exactly.
it.
So that is another criteria that we look for. And as well as, even though probably the price is $3, for the past weeks or months, has the price been steadily rising? Okay. So for example, it could be that the price was, let's say, $1, and then it rose all the way to about $2 steadily for like 2 weeks or more. That's another indication that
it's
going up gradually, and there is something which is propelling it. Okay. So these are some of the things that you look at and then you buy. So if you look at this one, for example, that I did say I got in last week Monday. Last week Monday, that is from this here. Okay. You realize that price was coming down. Then it stayed there, started going up gradually. So on this stock, previously price was coming down. It got to this point and then started going up gradually. Okay. So it was $1.80. It rose all the way to $4. Then it came down a little. It's coming down does not mean that people are no longer interested. But if you look at this, it came down, but it didn't come down lower than where it began on Monday. Okay. So this coming down technically means that people who were already in this trade are taking some profit.
Yes.
Okay.
So if you bought it like if you bought it down there, even when it came down, you still made profit.
Yes.
Got it.
Because you are still in the trade from here.
Yeah.
And it got to, that was $1.80. It got to about $7, or even more than that, to $7.60. And then it came down to about $3.50. Okay. So still you are in a profitable trade.
Got it.
It came down a little, and the next day it came down, but not more, because it finally closed the year. The next day it went up and then came down, but it didn't come so much as compared to this.
Yes.
Okay. So this is also an indication that people are still interested.
On.
Exactly. Okay. Now, with all of these going on, there was a gradual decline. If you look at the amount of people who got out of the trade, I will say this was a panic situation. Okay, they were scared that it will still come back down and then they will lose the profit that they made. That is why a lot of people have started coming down. But I was still in the trade because I knew that it will still go up. Now, look at what happened. On Friday, this is Thursday, price started going back up again. And then by Friday, it jumped it came down to even $1.11, and then it jumped all the way to almost $12.
Whoa! But what made that jump? Like, what made it jump so high?
The reason why it jumped so high was a lot of people then came back into the market to buy. And doing the research, there is some investment with other companies going on with this company. But even on Friday, this was not in the news.
Oh, I see.
There was no news about that. So if you are a technical trader and then you were focusing on news, you will miss
it.
This one.
People were leaving, but you held on. Yes. What made you hold on, even though everybody was selling?
Yeah, the reason why I held on was I was looking at how many people were getting out. And even though it was a gradual decline, the number of people who were getting out doing the analysis were not more than the number of people who got in.
Oh, so it was just a little bit of like, so if a lot of people were getting out, then you would have felt like, okay, yes, something is
wrong.
What are the criteria for you to say, okay, it's time to get out? Like, how much does it have to drop, or what are you looking at to sell?
Okay. So the rate of gain compared to the rate of loss is one indicator. Okay. When I said it, what I mean by that is that assuming you make $100 over a period of 6 months, and then you lose that same $100 within a month. So the rate at which you lost the $100 was faster than how long it took you to make it. Okay, but if you make $100 in a month and then it took you 6 months to lose that money, the rate of loss was gradual.
Yeah.
Okay. Yeah. So that is one indication that will let me decide to get out or hold on.
So if, let's say, you gain it in like maybe in a week, you made $100, and then over like 2 weeks, maybe you lost 50 of the $100. Will you still hold on, or since it's not so fast, it's kind of like in between? Then are you still holding or you're selling?
I may hold on based on further analysis on the chart. So that is not the only criteria I'm looking at to make a decision.
Got it.
There are other criteria that I'm looking at to make a decision whether to hold on or to get
sell.
out. Yeah.
Oh, I see. This is very, very interesting. Yeah. So it's all based on the information that the computer is giving you.
So for the 8 stock that I'll finally use as my watch list for tomorrow, about 90 to 95% of the time it's purely based on how price is behaving in the market or the patterns which are being displayed. On few occasions I will go through the news to see if I'll find any historical thing which is in relation to the trend, but I'm not focusing on current news to make a decision.
Yeah. Okay, I see. All right, so what we're learning so far is that he's using a computer software to make his picks, and you filter, you kind of put in what your criteria is.
Yes.
The computer gives you
a list of them, yes.
And then you pick.
Yeah. I'll analyze those options that the computer gives me and then see if it falls within my trading rules. Because I have certain rules, certain things I need to make sure that whatever that I'm seeing on the screen checks that rule. So if those rules are checked, I consider I'll find a probability, whether the probability is high, medium, or low. And then based on that, out of the 8, I'll have probably my first 3, or I'll arrange them in order That is my first priority, second, third, all that.
Oh.
Yeah.
And the rules, are the rules personal, or like is it something that
So
general rules?
it is not general rules. Um, um, they are rules that may differ from one person to another person,
Okay.
based on your experience, your exposure, and all that.
Yeah.
But my trading rules are, I believe they are highly profitable, because that's what my students uses, and my students are also profitable.
Oh,
Yeah.
okay. So let's talk more about your students. So I know the last time we talked, you did say you do, advise people. So
Yeah.
is it like official now where you have students coming in and learning and trading with you?
Yeah. So I have been training people close to a year now.
Oh, wow.
Yeah. And so I do organize classes for them, as well as, so it's a 3-month program. And then within the 3 months, the first month is for understanding the market and understanding the beginner trading strategies and all that. After 1 month, you start trading under our supervision. Okay. So
Oh.
we tell you, like, those lists of stocks that I did make mention of for the watch list. We give them those watch lists and then give them in order of priority. But so within that month, we have already exposed you to a lot, and we are giving you every day what stocks to trade on.
Oh, so okay. So you're like baby steps. Like first you cuddle them, and then you kind
Yes.
of let them, you open it up a little bit for them to
Exactly.
do something. Okay.
Yeah. So after the 1 month, they'll be trading under our supervision, and then every week there is one-on-one weekly calls with a student to go through the trades that they did for that week and help them to correct the mistakes that they made. So by the time the 3 months will come, they should be proficient enough to be on their own. And even after the 3 months, we still give them the daily tickets to trade on.
Okay.
Yeah, so it's part of the program. Yeah.
Oh, okay. So you, even though let's say they quote unquote graduate,
Yes,
you're still
giving them what stocks to trade on every day.
okay.
Yeah.
So guys, if anybody is interested, I'm gonna again link Patrick's information. And if you've been in Patrick's class, please comment down below so everybody knows, you can give your testimony down in the comments also. All right, so my next question is, are there trends or something that you see that will make you feel like, okay, I think this, I'm going to be losing money, so I'm going to get out? Or is it always after you start losing money before you get out?
Okay. When to get in a trade is very important. Likewise, when to get out is very important. Okay. Let me explain something here.
Okay.
When you look at this pattern here, price started coming down to this level, it went up and then started coming down again. It got to this point, it went up again and gradually started coming down. Okay. It wasn't a huge dip like what happened here. You see over here, price was going up, but it quickly came down and then continued. But if you look at what happened here, it was a gradual loss. So that was one of the things that I was talking about. That how long did it take to make that gain, and how long did it take to make that loss? So the loss here, okay, comparing the gain here, which was sharp, and then the loss here, which was gradual, gives an indication that it is going to turn around very soon. Okay. And what happened here on these 4 candles here is also a high indication that the trend of coming down is almost coming to an end. Okay. If you understand what is going on here and you are in a trade, even though price may come down a little, you wouldn't be that worried.
Okay.
And at the same time, you should also have calculated your risk, how much you are ready or willing to lose if anything goes against you. One big mistake that a lot of people do is they don't know how to properly calculate the risk.
I think that would be me. I don't want to lose anything at all. So that would be part of my calculation.
Yes. And if you are not able to properly calculate your risk, you would think that price is going down, but it will turn around and then you start um, panicking. You will regret getting out of the trade. Okay. Let me show you an example here. What happened on Friday? Okay? When this market opened on Friday, from this prior to this point, price was steadily trading within a range. The market opened, it came down a little. I had a red line here that
so you have a line that if it crosses below, then you sell.
Yes.
And that red line is from your filter, like your rules.
You're from my rules. If price comes below this, it means it is going against what my analysis was. So
that means
at
you're
this price
losing too
point,
much money.
That means it will go down. I had not lost money. Okay. I was in the trade for $1.80, but when before this price was about $3 and some change.
So you were still
So
making
I was
money.
still making money. But because of my analysis, I realized that okay, if price goes below $2.40, it means there's a high probability it's going to keep going down. And even though there was a slight dip here, look at what happened. It went up. Now, over here, you would think that there was a slight decline. If you got in here around this point, you got in at the wrong time. When price starts coming down, and depending on how much you bought, this was $4, it came down to $3.50. So assuming you bought 1,000, okay, which is 4,000, and then price had come down against you 50 cents, you have lost $500 right there.
That's when I'll be panicking and ready to sell.
So because you didn't analyze it properly before you got in at the wrong time, and now price is coming against you and you panic to sell. But at the end of the day, it went up.
Got it.
Okay. So improper analysis to know where to get in will also affect where your risk should be. If the person had analyzed it well, first of all, the person wouldn't even get in this trade when the price was here at this time, because calculating your risk from this level, it means you are supposed to risk to this level, which is more than $1, and that's a huge risk. Okay. Normally, the risk on every trade should not exceed 5%. For my trading rules, it shouldn't be more than 2%. Okay. So if the pattern or price is going up, one of the basic rules is you don't chase it. So everything that goes up will definitely come down. So wait for it to come down and settle at a good place before you buy. Yeah. There is so sometimes some of my students will send me some tickets, and then they will ask me for my opinion, what I think about it. This particular ticker, one of my students sent it to me about a week ago.
And this is
TEM.
TEM.
Yeah. So when he sent me the ticker, price was trading about $80-something.
Wow, for one?
For one.
Woo! Okay, that's pricey.
There are some stocks which even went over 100,000
for one.
Yes.
Oh, okay.
So when I did the analysis, and then I told him that no, where price is right now is not a good time to buy. You should wait for price to come to about $60 or $65 before you buy. The next day, the price went up to $91, and then he called me. He said, "Patrick, the thing is going up." I said, "No, don't worry. It will come down probably the next day or two." And then look, it's now trading at $67, and I'm expecting it to come down further. Okay. So if you don't know or understand that the market very well, he would think that price is going up. Yes, it was going up, but it will come down at a point.
So then, okay, now that it's coming down, let's say it comes down to maybe $50 and you buy it at $50. Is it going to go back up?
Yes. So that is where technical analysis comes in here. You study the trend, the pattern, and then there are certain things that you should look for, which will give you a signal that at this point it is going up. Okay, so even though I'm expecting it to come down to about $65, it does not mean that the moment it gets to that price point, I will buy. I will make sure I see things which conforms with my trading rules, signaling me to buy before I buy, because those are high indicators that it will go up.
Oh.
Yeah.
All right. So it's all about the rules. And if you want to know more about the rules, contact Patrick. Now we have an official school. So if you're interested, contact him and learn more. This is so fascinating. So you wait for it to drop, and then you based on the indicators, you know that if I buy it at 65 or whatever it is,
Yeah.
there's chance that it's gonna keep
Yes.
going up. Oh, I see. So knowing when to buy is maybe, I don't know, more important than when to sell.
Yes. Knowing the, I personally will consider knowing when not to buy is more important.
Yeah.
Okay. Most of the time, people think that, for example, this was $46 and then it's all the way $91 right now. So people think that, oh, it was $46, now it's 91. Let me buy it, will keep going up. No. Okay. It could pass 91, but at this point, based on everything which was happening here, even at the $85, everything shows here that it's going to turn around. So if you understand what is going on here, you won't even buy it at this point.
At this point, yeah.
Okay. And that is one of the main reasons why people lose money. They don't know when not to buy. So they quickly jump in and price will go against them,
and
then they will lose money. So the first thing is, whenever you are doing analysis, make sure that there are the signs which are showing on there are telling you not to buy. So once you have identified that it is not a good time to buy, now you find out when to buy. Okay. Because when you come here, even when price was $80, okay, over here, certain things showed up here, giving you an impression to buy. Yes, of course, it went up. Okay, but does it worth it to invest $81 and then just make $86 and just make about $6 profit, and at the end of the day it will turn around?
Lose it all. Yeah.
Okay. So there are a whole lot of things telling you right from this point, okay, that don't get in, even especially here, don't get in. So if you avoid and not to get in, here there are indications that are telling you to get in. You always take your decision not to get in than getting in, because it tells you a lot.
Yeah.
Yes.
Okay, so I was gonna ask you if you, and now that I understand it, I don't know if you can, but I'm still gonna ask. Are you able to, let's say, give maybe 5 stocks that you can say, as a beginner, try these 5 stocks?
Yes, but you should have trading plan. Okay. I can give you a stock. Let's say I can give 5 people a single stock. 2 of them may make money, 3 of them may lose money. Okay, depending on whether they understand what is going on or not. Okay. This particular stock is a highly profitable stock for long-term investment. But the question is, will the person understand when not to buy and when to buy?
So there are different stocks. There are short-term and long-term.
Yes, some of them are pretty much for short-term gains, and then it will never go up until a longer time. Some of them too are for long-term investment. So for example, the first one that I showed, which is the MLGO, and if you look at this chart historically, I'm going to do 1 year worth of data.
Okay.
So for a period of 1 year from now, at a point, it was going down. it came up to about 500 and something dollars. From that time until some few days about last week, everything was going down. Okay. So even though there was a huge move in this area, this I personally will not recommend this stock for long-term investment. Like holding it for 6 months or holding it for 1 year. No. Okay. Because everything shows on here that this had not been a good stock for the past months, long term. Yeah. But those which does well on a long term basis, for example, the one we were looking at right now, if you look at the historical record for over a period of a year, okay, this was trading at $22. It went up, it took a dip, it went up, it took a dip, which it didn't come below the $22 before. So at this point, it was a good indicator to buy, hold it for a couple months and sell, make your profit, let it come down again, and then buy again. Those are the kind of ones that you can do the long term.
So it does the price matter if it's short or long term? Like, are the stocks for short term cheaper? Let's say the $2 versus long term will be like $100 per stock.
It depends on the performance of the company as well. A stock may worth maybe $22 and it may have good indicators for a short-term gain. Okay. So something like this, if you buy a $22 and then you sell it for, let's say, $50 at the end of the day, you've made like 2 times your money. Okay. So depending on what is going on in the market and then what is going on with the company itself, a stock could potentially be for a short-term gain or a long-term gain. But on the average, those which are mostly for short-term gains are the ones which are not pricey. Like anything below $5 or anything below $8, those ones mostly have high moves in the day to make some huge money.
So I always thought Amazon or Kellogg's or whatever. Like I thought those were the stock names. No.
Those ones, okay, I will categorize them under long-term investments. Okay, if we look at a company like Amazon, okay, if you look at a company like Amazon, on the long-term base, realize that at a point it was trading at $68. It went up to about $185. It came back to about $70. Right now it's trading over $200. Okay. If you want to target this for daily gains, the moves are not that huge. Okay. So for example, couple days ago, this was about 2 weeks ago, it opened at $238 and then $242. That's only $4. Okay. But so $4. You invest over $200 to make $4. In terms of trading for day trading gains, it is not much. Okay. But if you had gotten in at, let's say, $130 and held it on for like a month to make 200, that is fine. Yes. Yeah. So those companies, I will categorize them under long-term investments, and then when price get to a certain point, you sell it, wait for it to come down to a certain level, buy again, and then it goes up, you sell it, wait for it to come down at a certain level. So you'll be making money based on the peaks and then the dips that happens in the market.
So would you like go in and say, okay, I'm buying Amazon as a long term, so no matter what, I'm just gonna hold, versus like there are like the short term, you're like, okay, I'm just doing it for today, no matter what, I'm getting out by the close of today.
Yes, depending on how I have divided my portfolio, I may sell something in my long-term portfolio and then buy a different stock. I did trade on Nvidia. I sold some of my Amazon stocks and then used it to buy Nvidia some months ago. The reason was I made a lot of money on Amazon, and then I realized that Nvidia was picking up after it came down.
So it was worth
yes,
it.
so comparing the two, based on my analysis, it's worth investing in Nvidia at that time. So I sold a chunk of my Amazon stocks and then invested the money in Nvidia.
Got it.
Yeah.
Okay. Wow, this is very, very interesting.
Yeah.
So, guys, I'm learning a lot. I hope you guys are learning along with me. I wanted to see if I can get, like maybe 3 or 4, but it sounds like you need more education or guidance before, just putting your money out there and potentially losing it. So I would strongly recommend, and Patrick is open and available, just shoot him a text or an email. He's even on WhatsApp. Call him and see what he can help you with. Just have a conversation and see what options there are for you. Like he said in the previous video, you don't need a lot of money, and he was showing us some stocks that were like $5 and $2. So it's not about having a lot of money. Just try and get your feet in there and see if you can make some money. Correct?
That's true.
Any thoughts? Any final words?
Yeah. So I think one of the main reasons why a lot of people don't even go this route is lack of properly understanding what the market is and the opportunities in there. They mostly focus on the risk involved.
Yes.
Okay? Everything is risky in this world.
Yeah.
Everything. I don't know what you are doing, but everything is risky.
Yeah.
It's all about properly educating yourself and then also knowing how much you can risk. Okay. If you don't have a plan for your risk management, that is when it becomes more riskier.
Yeah.
Okay. Definitely, there will be mistakes here and there if you don't properly understand it. But if you know that, okay, I'm buying this for $2. If it goes to $1.70, I want to sell it. That is your risk management. Or I'm buying it for whatever price. If I lose 3% of my initial investment, I want to sell it. If you don't have some of these criteria, by the time you realize the thing for $5 is now $4, and you are sitting down hoping it will go up, and it is $2, and you are still holding on to it. No,
you have to draw a line.
Exactly.
Yeah. And I think that's when, like we said the other time, that's when ego comes in, because you're like, I want to make it. I'm going to make it. But if you draw the line and say, okay, if I lose 10%, which is too high, but if I lose 10%, I'm getting out no matter what, then you have to stick with the plan.
Exactly.
So it's all about planning.
Yes.
All right. Any final words? Anything else?
Yep. If anyone need help, just reach out. We are here to help you, and keep following the channel, like the channel, subscribe to it. There are a lot of good informations out there. She's doing a great job.
Thank you.
It's not just in one area. Okay, she's diversified.
Yes.
Doing a whole lot. Cybersecurity.
Yes. Healthcare. Yes.
Dressing.
So we're doing it all.
Yeah, exactly. So keep subscribing to it, follow the channel, like the videos, and
thank you.
There's going to be a lot of content out there, and everybody will get his or her share from it. Yeah.
Thank you.
And thank you very much
for coming. Thank you so much, guys, for watching, and thank you, Patrick. Like he's come to this channel 2 times. He's made time for us twice, and I appreciate it so much. So thank you. Welcome. Thank you guys for watching.